I want to talk about one habit, not over trading, not revenge trading, not even a strategy related habit. It's one specific micro habit that traders do every single time, multiple times a week, that chips away at your profitability. This one micro habit is costing traders thousands of dollars per year, and the worst part about it all is in the moment it feels like the right thing to do. It's called stop widening. And if you've ever moved your stop loss whilst the trade was still open, you've probably done it before, and a lot more often than you think. Stop widening is the habit of moving your stop loss to a wider area in order to avoid the feeling of losing. So here is what's actually happening. You're in a trade, you've got your stop loss, right? This is your invalidation level below this low. And now you've set your stop loss. And as price starts to move below your target, you decide to give it more room. As you give it more room because stop is moving against you, maybe 10, 15 points away, you drag that line just a little bit down, just a little bit down. And just to see if it needs a little bit of extra space to come back up. And here's why it makes the habit so dangerous. It is because in the moment, you feel like you're doing the right thing. In the moment, you feel like you're actually bringing your market intuition and experience into the game. And that feeling right there is actually the problem. You're moving your stop because you want to avoid the feeling of losing rather than for the technical aspect of things, right? And what we've just done, we've just doubled our risk actually, and even though it went our way a little bit, it still stopped us out, and we've doubled the risk for no reward. Okay guys, let's look at it at a human behavior and neurological level to get a deeper understanding of what it is and why we are doing what we are doing. Let's meet Kahneman and Tversky. These two psychologists published a study in 1979 that eventually won a Nobel Prize award, and this curve right here is their core finding. Basically, in simple terms, when you gain $100, it feels good, okay? But now when you lose $100, not only does it feel not good, it feels bad, but it feels twice as bad as the $100 feels good. Basically put, losses feel twice as much more painful than an equivalent to a win feeling good. So here is what's actually happening on a neurological level, okay? So as price approaches your stop loss, your trade is now open and your loss is about to happen, right? So now your brain is factoring this in, and this causes your amygdala to fire. And what this does is this causes a fight or flight response. This is because your brain reads financial loss as a physical threat. And what this does is it immediately spikes your cortisol level, and this makes your prefrontal cortex go completely offline, okay? And when your prefrontal cortex is offline, you can no longer make rational decision making, because that prefrontal cortex is what is responsible for emotional regulation and also rational decision making, right? So this is where the loss aversion theory kicks in, because this loss is now going to feel twice as worse than any win you've ever felt before. So your instinct and your overwhelming urge to avoid the loss comes from these factors over here, right? And because this loss feels unbearable, you cannot delay your action. You cannot also control your action, and you must act now to protect yourself from feeling this way, right? You do not want to feel this way. So what do? You widen your stop loss, because now you don't want to feel the feeling of losing, and you do all you can to delay it, because delay in the moment, it feels like relief, and relief is inherently the right thing to do when these things are happening, right? That is why we widen our stop loss, and it's very important to become aware of it. This data is from my trading from around 2 years ago. On average, when I widened the stop loss, the trade would recover and hit my target 30% of the time, right? Whenever I widened my stop loss and it resulted in a loss larger than my original stop, this was 60% of the time, guys. All right, so this is me tracking my own trades, and this led me to a 30% recovery and a 60% decrease. For a whole 52-week trading period, I lose 23,000. Not from a bad strategy, just from the fact that I'm widening my stop loss. I think it'll be important if you start tracking your data and start tracking how disciplined you are with your stop loss and the kind of impact your stop widening is having on your trading, okay? Okay, so now we understand the bad habit. We understand the impact that it has on our trading. We also understand the neuroscience behind it and why we as humans do it, why all of us humans do it. Now I kind of want to give you actionable steps that can help you in your trading in order to not widen your stop, in order to feel acceptance of the loss, and in order to eventually become profitable, right? First thing you want to do is to meditate daily. This is things that you do away from the chart, right? 5 to 10 minutes a day is all you need to strengthen your prefrontal cortex. As we mentioned before, the prefrontal cortex is very important in order to make key levels under emotional pressure, right? So you have to meditate and pray 5-10 minutes every day. The second thing you want to do is you want to pre-visualize the loss, right? So this allows you to practice feeling the losing sensation without actually taking a loss. And what this does is, as you do take the loss throughout the day, if you do take a loss, you'll be more ready and much more willing to accept the loss, and much less likely to widen your stop loss. Okay, so that's why it's important to always visualize yourself losing before it happens. And obviously, we're not trying to manifest a loss, we're just trying to be accepting of it. Okay, because once we have acceptance, we can control our behavior. It's very important. And another thing is, always define your max risk for the trade before you even open the charts. I like to write mine down every day. It doesn't often change, but I like to write it down just that way I'm already aware of my maximum risk. And now on the chart, we want to make sure that your stop loss has room to breathe, right? I see a lot of people putting their stop loss way too tight just because that's how they're normally sized. It's important to understand that your stop loss must be at an invalidation level, and not just somewhere where you want to put it because that's how much you're willing to lose. It has to be at a level where if you do go to that price level again, you're more likely to be invalidated on your trade idea, and you wanna be out of the trade, right? And yeah, the last thing I already mentioned is you want to size the stop accordingly, and you don't want to just have a random stop based on how much you're willing to lose. You want to make sure it's sized accordingly in relation to your invalidation level. Okay, very important.